Welcome, Bitcoin fam, to the #1 daily Bitcoin pod. Bitcoin pumping back in the green. We recaptured 95,000 here this morning. Also breaking news, $5 billion Cardone Capital to acquire 1,000 plus BTC. Also, the White House just said there is a space race amongst countries to accumulate Bitcoin, and the USA will buy very quickly. We'll also be discussing Bitcoin targets 115,000 as Bitcoin supply metric nears historic euphoria zone. Naturally, that will re-enter us at price discovery. We'll also be discussing BlackRock, the world's largest asset management giant. Their ETF just bought 970 million in Bitcoin as the inflows continue to surge. Also, Strategy scoops up 15,355 Bitcoin as Max Kaiser declares corporations must sailorize to survive. We'll also be discussing global central bank gold rush could spark Bitcoin price run to new all-time highs, as well as big breaking news. Arizona state makes history, the very first state to launch a strategic Bitcoin reserve, pledging up to 10% of their public funds. And we're talking about $31.5 billion, which means over a $3 billion accumulation of the biddy for the state of Arizona. We'll also be taking a look at the overall crypto market, all this plus so much more in today's show. If you're new to the channel, important, smash the likes, go ahead, subscribe. We're the #1 daily Bitcoin pod. Today is pod episode 1977. I'm your host, JV. It is Taco Tuesday, April 29th, 2025. Markets back in the green. Bitcoin recaptured 95 G's here this morning. So kick it off with our market watch as we do each and every day. Caffeinated JV in the building. Bitcoin up 1% on the day. Ether up back above 18 hundos. XRP in the green. BNB, SUI, and Tron correcting and in the red. And checking out the infamous CoinMarketCap.com. Just shy of a 3 trillion market cap, 2.97 trillion to be exact. Biddy market cap just shy of the 1.9 trillion, fast approaching the 2 trillion mark. And we got roughly 75 billion worth of volume. For the past 24 hours, Bitcoin dominance 63.4%, with the Ether dominance at 7.4%. Checking out top 100 crypto gainers past 24 hours. Layer up 15%, followed by Virtual up 13%, followed by Floki up 8%. And let me know which alts, if any, are bullish on for the bull. Holla at your boy. And checking out the crypto bubbles, we get that visual perspective on the day. Safe to say, maybe 60-40 green over red. Zooming out on the weekly, it's like 90 to 95% in the green. That's a good sign. And for the monthly, finally, the majority of the alts are actually in the green for once, which is also a good sign for the market. And checking out the crypto greed and fear index today, we're a solid 60 in greed. Yesterday, 54, last week a 47, and last month a 32 in fear. And checking out the infamous time chain calendar, we're currently on block number 894,475. We have 155,525 blocks until the next halving. Try to repeat those numbers. And you currently exchange one fiat monopoly dollar for 1,053 sats. So you know what to do, broskies. Pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. Our next story of the day, the latest TA, aka astrology for the baddies. Headline reads, Bitcoin's in a critical zone as the triple breakout meets 93.5 support battle royale. Let's go. Bitcoin broken through the 3 key resistance levels in a week, but the biggest reclaim battle has yet to continue. Bring it. Last week's candle saw the reclaim of the full 3 resistances. In addition to the horizontal weekly resistance, Bitcoin broke beyond the multi-month downtrend previously discussed, and as well the 21-week exponential moving average. Quoting Rec Capital, the analyst right here, Bitcoin broke them all last week. Bitcoin broke the triple resistance, and triple rhymes with you already know facts. Another post highlights Bitcoin leaving both the 21-week and the 50-week EMAs behind, which traditionally offers bull market support. Quoting Rect again here, Bitcoin has repeated the mid-2021 price history with a breakout from the range formed by the 2 bull market EMAs. And those, for those that don't know, exponential moving averages as outlined in the chart. And for some, however, the real test for the biddy price rebound lies elsewhere. Well, we shall soon see, shall we? Material indicators, the analyst wrote, it's one of the reasons why I think we should see more downside volatility. And also Alan Trade said he hoped the 21-week simple moving average would hold, but the price was in a critical zone. Oh no. Short-term price magnets also include 94,000 thanks to the wall. How about this? How about 100,000's a new magnet? We just send it like we're Magneto in this Peace. And some breaking news. Grant Cardone, it feels good to front run him and his brother. So employee of the month might go to Grant Cardone. $5 billion Cardone Capital to acquire 1,000 plus of the biddy. Nah, for real though, I think Jack Mallers gets the employee of the month with creating the Bitcoin acquisition company 21, but nonetheless, he could be the runner-up. Why not? Also, breaking news right here. White House just said there is a space race amongst countries to accumulate a Bitcoin. That's a fact, Jack. That's a black Jack. The USA will buy very quickly, and if you don't know, now you know. Now, I promise some astrology for the baddies. I mean, the baddies have been getting low-key jealous. Nippinator's giving us an indicator. He's making it low-key behind the bed today. So lots of bullishness in the market. 100,000 in play. Well, let's pull up some of the live charts for the baddies, of course. As you can see here in your screen via TradingView, via Coinbase, 1 hour chart, rising wedgie formation sensation. Zooming out, get a broader perspective. We look at the 4 hour. The 4 hour says it's going up forever, JV. Rising wedgie, the only type of wedgie I approve of. Send it. Also, zooming out a little further, we take a look at a daily. We've been seeing nice bullishness on the daily chart. Falling wedge, but the silver lining, we're pumping. And you can see we have a bull target in the red, sitting in price discovery mode, just shy of 112,000. Bear scenario, sitting just shy of 69,000. And you can see how many green candle closes we have seen in the past couple of weeks. It's mostly green candles, which we love to see. We're so back, 100K in play. Zooming out a little further, we take a look at the weekly, and the weekly says, looking strong. Yeah, we had a big, strong weekly candle close. You can see the big green one. And we're already forming green for the brand new week, even though we're early in the week, 2 days in, Taco Tuesday. Cup and handle sexy target pattern sitting at 124,000. And if you don't know, do your homework, and then you'll know. And zooming out for the monthly, you can see we're forming a green candle for the month of April. We get a close in a couple of days. So Q2, thus far, so good. First quarter, we had a very bullish January, and then we had bearish February and March. So hopefully we can maintain the green bullish momentum and the green candle closes throughout the rest of the year. Why not? And if you don't know, now you know. Next headline here reads, Bitcoin targets 115 Gs as Bitcoin supply metric nears the historic euphoria zone. One of my favorite Kendrick tracks, by the way, Euphoria. Shout out Shortcoin. Anyways, nearly 87% of the Bitcoin supply is in a profit. That's right. That's not too shabby. Let me know if you're one of them. Historically, the metrics climb into the 85-90% range, signaling a transition from the healthy optimism to the speculative euphoria amongst the traders. Between the October-December 2024, for instance, the Bitty price climbed from 80 to 100,000. The rally coincided with a Bitcoin profitable supply, rising from under 80% to the high of 99%. And crypto quant based, the analyst Dark Frost reminded that the Bitcoin euphoric phase may not last forever, Laura, on the timeframes, leading to the sharp corrections as hodlers begin realizing their gains. The Bitcoin price established the record high of nearly 110,000 in January. That's a sexy bitty blackjack, with the profitability supply hitting 99%, virtually meaning almost everyone was in profit when we hit the all-time high. Common sense, right? But the crypto dropped by over 30% afterwards. Oh no. We recently bottomed to 74 and we're right back about to reclaim 100 Gs. Welcome to Bitcoin halving, or I should say post-halving volatility, and expect more of it. Currently, the supply is in profit, climbing back above 85%, which is fairly positive. Noting the recovery from the recent bottom of 75% is still better than when compared to 45-50% lows witnessed during the bear market corrections, which we have seen in the past. Besides, the Bitty supply and profit still remains below 90%. Crossing above 90% has historically preceded profit-taking behavior amongst the traders, the cabbage hands, the Dave Portnoys of the world, suggesting there is more room to grow for the Bitty prices in the coming days. The analyst says right here, of course, there are certain levels that are more comfort to a bull than others, but generally an increase in the supply of the profit tends to fuel the bullish phases. That's right. And additional on-chain data supports the bullish outlook. Bitcoin's first buyers momentum, buyers are actively accumulating, while the profit takers remain relatively quiet, according to the Glassnode metric tracking the Bitcoin cumulative supply. This means the fresh demand is coming in without the heavy selling, a key ingredient for keeping a rally strong. And as you know, Saylor just announced yesterday purchasing like another, $1.4 billion worth of Bitcoin, and it barely moved the price, which is mind-boggling at the level he's accumulating. But you already know, sign of the times, you see what's coming. 115 zone in play. That's right. Bitcoin bounced strongly from 89 to 90 support zone to key horizontal level from the prior price, strengthening the case for the multiple upsides. Bring it. The area, according to the analysts, acts as a max buying zone where the buyers have aggressively stepped in to limit the Bitcoin drawdowns. That's right. Below it, the 70-72 region remains untested, aligning closely with a long-term ascending trend line. If Bitcoin faces a deeper pullback, the zone can serve as a critical secondary support. For now, the Bitcoin resilience above 90 and at the time of the live stream, 95 Gs as we fast approach the psychological $100,000 mark with now 115,000 in play. Let me know when you feel will likely hit price discovery. Currently sitting at 109.3 and break through to the other side. I'm projecting it to happen this month of May, which is right around the corner. Let's discuss these ETPs. Lots of volume here. Headline reads, BlackRock Bitcoin ETF buys 970 million in Bitcoin as the inflow surge, boosting the market. That's right. BlackRock's ETF bought nearly $1 billion worth of Bitcoin on behalf of its clients on April 28th, with continued inflows providing structural support for Bitcoin's price appreciation. IBIT ETF literally bought almost $1 billion worth of Bitcoin April 28th, the second largest day of inflows on record after scooping up 1.12 billion of Bitcoin. And IBIT's near $1 billion investment brought a total net inflow to U.S. spot Bitcoin ETFs to just above 590 million. With all other ETFs realizing net negative outflows or remaining flat. ARK Invest's ARKB ETF recorded the highest outflows of 226 million and nearly 1 billion into the Bitcoin ETF today, the second largest inflow since January 2024, which was the inceptional launch. I still remember when there was no demand, said Nate Gerasi, president of the ETF store. BlackRock's IBIT is the largest spot Bitcoin ETF with over 54 billion in assets under management, accounting for 51% of the total spot Bitcoin ETF market share. The latest inflows make IBIT the world's 33rd largest ETF amongst crypto and traditional finance-based ETFs. Now, Bitcoin's recovery over the past week was aided by over $3 billion worth of cumulative net inflows for the spot Bitcoin ETFs, marking their second highest week of investments since launch. The Bitcoin price posted its strongly weekly gain since Trump's election victory, but signs suggest another move could be brewing. ETF inflows into the spot products of the BITI topped $3 billion last week, the highest since November, providing structural support, which could fuel further upside. Bitcoin investments have previously been a significant driver of the Bitcoin upside momentum. Bitcoin ETFs accounted for an estimated 75% of the new investment into Bitcoin when it recaptured the 50,000 mark in February of 2024, a month after the debut of the U.S. spot Bitcoin ETFs. Our next story of the day, strategy scoops up 15,355 Bitcoin as Max Kaiser declares corporations must Sailorize to survive. That's right. Saylor announced it recently purchased another 15,355 BTCs, worth approximately $1.4 billion at an average price of $92,000. The firm currently holds 553,555 Bitcoin, valued at $52.7 billion, with the average buying price $68,500, with the unrealized profit approaching $15 billion. Quoting them here, by continuing to grow its Bitcoin holdings, the company maintains its status as a major force in the crypto market, drawing interest from investors and industry analysts. Strategy is the largest Bitcoin treasury company, an independent publicly traded business intelligence company, and a NASDAQ 100 stock. Meanwhile, the strategy accelerates its Bitcoin buying spree. 21 Capital is starting a viral effect where companies are turning to Bitcoin accumulation. As you know, a recent publication highlighted 21 Capital, the Bitcoin investment firm sprouted after Cantor Fitzgerald, SoftBank, and Tether and Bitfinex pulled $3 billion in capital for the launch, and I believe it's going to be like 42,000 Bitcoin on the balance sheet to begin. And Jack Mallers was announced the CEO, and it's a Bitcoin acquisition company, ultimately to challenge strategy at the end of the day and become the biggest of the world. And based on sentiment, the new venture could inadvertently challenge Strategy's position, at the helm of the corporate Bitcoin ownership in a model sense. And according to 21 Capital, Strategy's size could make increasing its Bitcoin shares difficult, a metric investor tends to consider. And amid the chatter that 21 Capital could threaten Michael Saylor's led firm, BitStrategy, a shareholder at Strategy, challenged the prospective market rival's business model. That's right. In a detailed post, BitStrategy acknowledged the brewing tension in the Bitcoin treasury arena. However, it holds that strategy is way ahead of the competition. Clearly, I mean, they have almost 600,000 Bitcoin. Their company is in direct competition with ours, and they seek to exploit a perceived vulnerability in our structure, openly highlighting their strengths relative to ours to win the investment. Beyond the Bitcoin yield, they also reported the firm initiated key performance indicators a month ago for the Bitcoin gain, BTZ. But yeah, there's a lot of Bitcoin gainers. This proactive by strategy suggests proactivity, defending a position, and sailors welcoming it. Of course, you can fake an impressive Bitcoin yield. You cannot fake an impressive Bitcoin gain. Amen. However, another analyst says, as someone who has done deep thinking about why MicroStrategy is undervalued, it might be true Bitcoin gain can still be substantial, if not higher, for MicroStrategy on a per-share basis. However, which would be the supporters for those that stock it, will be hard to deny. Smaller, similarly reputable company is going to make more Bitcoin per share when on the same strategy. So let me know your thoughts. This outlook aligns with the sentiment from 21 Capital that strategy's large size impedes the increasing its Bitcoin per share. Yeah, I mean, and quoting Max Kaiser, for corporations to survive, they must mimic the strategy's process. They must sailorize or die. I repeat, sailorize or die. And according to Max, the world is moving to a Bitcoin standard, and all the fiat money, even with the stable coins propping them up, is doomed. Next story of the day, we're going to discuss global central bank gold rush could spark the Bitcoin price to a new all-time high run-up. That's right. Global financial tides are shifting significantly, and Bitcoin price could greatly benefit. Recent data indicates the U.S. Treasury Fund saw $19 billion in net inflows last week, exceeding the 2020 pandemic peak of $14 billion, with the 4-week moving average rising to $7 billion, the highest since March of 2023. The 30-year U.S. Treasury yield fell by 30 basis points from its April peak, indicating a rise in bond prices as investors are willing to accept lower returns in exchange for the safety of these bonds. This surge in demand for the Treasury as a safe haven asset boosts market liquidity and stability while lowering U.S. borrowing costs. However, foreign central banks have pivoted, cutting Treasury holdings to 23% of the U.S. government debt, a 22-year low. This suggests that while private investors were possibly driving inflows, foreign central banks are stepping back, possibly due to the ongoing tariff dispute with the U.S. And at the time, the gold shares of the global reserves have surged 18%, a 26-year high, up 8% since 2015, with China doubling its gold reserves to 7.1% since 2023. This global de-dollarization trend mirrors a pattern that favors the biddy. During the 2020 pandemic, when U.S. Treasury inflows spiked amid Novid uncertainty, Bitcoin soared from 9,000 to nearly 60,000 within a year. That's a fact. While gold share of the global reserves rose 14.5% in 18 months, the current environment marked by stabilizing bond market and central banks gold rush implies a similar trigger for the Bitcoin next bullish move. In 2023, when the U.S. Treasury yields rose amid the recession fears, Bitcoin gained 47% in a month, while the Nasdaq dropped almost 9%. With yields easing and central banks signaling a lack of faith in the U.S. dollar, Bitcoin's appeal as a global store of value improves. However, Bitcoin's bullish narrative could falter if the global markets enter a recession this year. This is due to the investors' decision to prioritize liquidity in traditional safe haven assets like cash or U.S. Treasuries during economic downturns, and as noted last week, over speculative assets like the pre-low biddy going up forever, Laura. That's right. Anonymous global market researcher Capital Flows noted that the macroeconomic liquidity and positioning factors drive Bitcoin's bullish price trajectory. The analyst highlighted the Bitcoin impulse strength in a directional probability skew chart, suggesting that it is poised for an upwards movement. This aligned with the Bitwise CEO Hunter Horsley's observation that Google searches for Bitcoin are near long-term lows, suggesting the rally is fueled by the institutions, advisors, corporations, and nations rather than the retail investors, which driven the previous bull runs. The lack of the retail-driven search interest contrasts with historical trends, where Bitcoin search volume strongly correlated with the price of the previous cycle, indicating a shift in market dynamic where institutional adoption is fueling the demand. Now for our feature story of the day, breaking news just in, the state of Arizona makes history. It is officially the first state to launch the strategic Bitcoin reserve, pledging up to 10% of public funds. So let's break this baby down. As you can see here in the headline, Arizona state approves the first ever U.S. Bitcoin reserve set to invest 10% of $31.5 billion state assets. That's what's up. Arizona legislator passes Bitcoin reserve bills, moving closer to stockpiling the pretty little bitty. going up forever, Laura. That's right. Lawmakers in the Arizona House of Representatives passed 2 bills that could allow the state to adopt a reserve using Bitcoin or other cryptos. In a third reading on April 28th, the Senate Bill 1025, SB 1025, a proposal to amend Arizona statutes to allow for a strategic Bitcoin reserve. 31 members of the Arizona House voted in favor of the bill, with 25 opposed. A similar bill, SB 1373, to establish a state-level digital asset reserve, passed with 37 lawmakers in favor and 19 voting nay. This bill basically takes the approach that probably 15 other states are considering, the same legislation nationwide that allows the treasurer to invest up to 10% into, probably mainly Bitcoin, but other things as well, as shared by the state representative. I think this probably would start as a may for a foreseeable future, but as things continue to pivot towards Bitcoin, and these things, we have that already in place for the future. Game on. The approval brings the bills closer than any other state-level initiative in the United States to getting a crypto or Bitcoin strategic reserve actually implemented and signed into law. Similar legislation proposed in New Hampshire passed the state's House in April and is expected to head to the Senate for a full floor vote soon. Meanwhile, Arizona Governor Katie Hobbs announced April 17th she intended to veto any bill until the lawmakers had a serious bipartisan funding solution. Boo! That protects health care for Arizonans with disabilities. However, with the passage of such legislation on April 24th, the governor could be more open to signing SB 1025 or SB 1373 into law. And let me know how you think that will play out. Meanwhile, federal plans to establish a national crypto reserve. That's right. The state-level efforts to create a Bitcoin reserve comes amid the push from President T and Republican lawmakers to do the same at the federal government. Trump signed the executive order in March with a proposal for a strategic Bitcoin reserve, as well as the digital asset stockpile. Also, Wyoming Senator Cynthia Lummis, a crypto advocate, proposed that Congress pass legislation and allow the U.S. government to hold more than 1 million Bitcoin. They better hold more than that, or Michael Saylor is going to end up with more Bitcoin than the government. In part through crypto seized through civil or criminal forfeiture, some lawmakers suggested Lummis's bill was an attempt by Congress to codify Trump's executive order into law. And there you have it. I think it's a good sign that it's 1 million or more versus putting a hard cap. You should never put a hard cap on how much Bitcoin you accumulate unless that hard cap is 21 million. Ask Michael Saylor, and if you don't know now, you know.